Welcome to the presentation of the 2023 results of Palfinger AG. My name is Felix Strohbichler. I am the CFO of Palfinger. 2023 was the best year in company's history of Palfinger. We had a record revenue, record EBIT, and also a record consolidated net result, despite of inflation, high interest rates, and a difficult economic environment overall, which slowed down especially the order intake in EMEA. Another important topic was that we were still faced with high inventory levels. However, we saw a clear improvement in Q4 2023. To give you an overview of Palfinger at a glance, Palfinger is a global market leader for crane and lifting solutions with a revenue of 2.45 billion in 2023. We are present in all regions worldwide with around 30 production sites, which makes us more independent from trade barriers, currency fluctuations compared to competitors. And what is the most important factor for our customers, that we have around 5,000 service centers around the globe. So we are really close to our customers, and this is a real USP. We have around 12,700 employees at the end of 2023. And at the bottom of the slide, you can see the revenue distribution by region for the year 2023. Around 60% of the revenue was generated in the EMEA region, 25% in North America, and the rest is split between the other regions. Important to mention is that North America is by far the most important growth region for Palfinger. We do expect to grow the share of revenues of North America to around 1/3 within the next years. Here you can see the innovative and powerful product portfolio of Palfinger. We offer plenty of different solutions, on the one hand installed on trucks or rail cars, on the other hand lifting solutions and crane solutions for the marine industry. And the link between those solutions are the digital offerings we have in our portfolio for our customers. We have quite a broad customer segmentation, so around 40% of our customers are in the construction industry, mainly material handling. However, we have many more customers we serve. Around 10% of our revenue is in the forestry industry, around 10% in waste management and recycling. And then we have a lot of other different customer segments with a smaller share, like transportation, public sector, rental, oil and gas, railway, passenger cruise, agriculture, fishing, and offshore wind. As you can see, there are also a lot of customer segments which clearly serve the megatrend of ESG in our portfolio. Talking about ESG, this is of course a big driver of our strategy, of our operational action, and of course also a big business opportunity for Palfinger. Obviously, we focus on reducing our CO2 footprint, but also, what is very important, to focus on all the people we touch, health and safety for our workforce, for our customers, for all people who are close to our products, to increase the diversity of our workforce, qualification, and last but not least, governance and transparency are absolutely in the focus for Palfinger. Talking about a few highlights of the markets in 2023, clearly, as I mentioned, North America is the most important growth market. We increased the revenue at around 17% last year, and what is even more important, also the earnings development continued in the right direction. In Latin America, the environment was increasingly difficult, especially Argentina is very difficult nowadays. Still, we could strengthen our market position in Latin America. Asia Pacific, we have seen a high order intake for loader cranes, especially also in the future market of India, which will grow its importance dramatically over the years to come. And also in APAC, clearly we can see the improvement in profitability, not only in revenue. On the other hand, we have to say that our joint venture in China is still confronted with a relatively low level of activity, and the improvements are only very slow in China. The marine business has shown a very good development last year. We have seen significant growth in order intake, around 40%, also in turnover, driven by cruise ship service, offshore business, and also wind farms, for example. And this not led to an increase in revenue, but also to increased profitability. In EMEA, we have seen a lower order intake due to the macroeconomic developments. However, due to the big order book we started with into the year 2023, we could still increase significantly our revenue across all product lines, also improve the profitability, also based on the fact that all the price increases which had been implemented in the past years due to inflation have become fully effective in Q1 2023. And as already mentioned before, we were faced with very high inventory levels, also linked to the fact that the truck manufacturers had a low delivery reliability, and this led to bottlenecks in the installation network we had to compensate for, and this increased our finished goods inventories quite substantially. However, this task to bring inventories down to the targeted levels will still take a few quarters. Here you can see the best slide from my perspective. It's the results and the revenue development for the last year. As mentioned, revenue of 2.45 billion, a plus of 10%, but what is more important, that the profitability has improved over proportionally, an EBIT of 210.2 million, an increase of 40%, and of course key is the consolidated net result, plus 51%, in total 107.7 million. This will lead to the best dividend in the history of Palfinger of €1.05 and a dividend yield of around 4%. Here you can see some KPIs regarding our balance sheet. So Palfinger has a very stable and solid balance sheet, an equity ratio of around 35%. You also have to take into consideration that Palfinger has around 7.5% treasury shares, which would account, if we would issue the shares at the proper share price, for another 3% of equity ratio. The net debt has increased by around 60 million to 668 million in 2023. The main driver was the additional increase in working capital, which we'll see also on the cash flow statement, but also the high level of investments. However, net debt EBITDA at 2.21 is at a very healthy level, and our target is clearly to get to a level of below 2.0 here. And last but not least, we could increase the return on capital employed to a level of 11.5%, which is not far away from the target we set ourselves for the year 2027. Coming to the cash flow statement, of course, the very good profitability provided a good starting base for the free cash flow. However, change in working capital was still negative, so we had another increase in working capital of around 41 million, and also the very high level of investments of 165 million, driven by a lot of large projects, led in the end to a free cash flow of 46.5 million. So it's a clearly positive free cash flow despite of changing working capital being negative and despite of the high level of investment activities. As you can see, in the past 2 years, the changing working capital had a huge negative impact, even leading to a negative free cash flow. But now we have clearly the commitment and the target to show positive free cash flow in the years to come, also by further improving our working capital. Coming now to the outlook for the year 2024, we have still a weak economic environment in EMEA. We have still a positive development in North America. We also expect this positive development in North America and also in the marine sector to continue. However, we have, of course, a very limited visibility. We still have an order backlog until the end of Q2, so we have a good visibility for the first half year. However, there are a lot of chances, opportunities, but also risks for the second half year. So we do expect now for the first half year a stable revenue based on good profitability. However, for the second half of the year 2024, due to the very limited visibility, we cannot give an outlook at this point in time. Clearly, we focus on optimizing the working capital. We have a strict CapEx management in place, working on increasing the productivity. We do targeted cost reduction actions just to make sure that the resilience is there, that we are able to react in both ways, either to use the opportunities or to benefit from the opportunities, but also to be able to react in case the market should remain on a very low level. Last but not least, you can see that our ambitious financial targets for 2027 remain unchanged. So as the number one in the market for crane and lifting solutions, we want to achieve a revenue of 3 billion from organic growth only, with an EBIT margin of 10% and a return on capital employed of 12%, a number we've almost reached already in 2023. Thank you for your attention. In case of any questions, please contact Hannes Reuter. Thank you.